I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a regular guest. He's always fascinating when he's on. I always look forward to it because I always learn something new. He does proprietary economic research at KirbyAnalytics.com. He is a macroeconomic analyst. Of course, I'm talking about Rob Kirby at KirbyAnalytics.com. Rob Kirby, thanks for joining us today on USAWatchdog.com.
Pleasure to be with you again, Greg.
We're going to get to this in a minute, but one of the things I've always asked you about is about your global sources. You got sources all over the planet, in Asia, in London, and all over the place. You also do macro economic analysis, which is brilliant. You came up with the Bitcoin being people were running out of the dollar at 1,000. What is it now? We'll talk about that in a minute. But also, I want to talk to you about the gold. You also buy tons of gold for people, tonnage. I know that your client list is secretive and what you do is secretive, but you do have great sources. We'll get into that in just a minute. But I want to talk about the last few weeks, these big hits on gold. I mean, a $4 billion notional, another $2 billion, dumped into the gold market, which is, relatively speaking, a tiny market. And then we don't get a big suck down. What's going on with them dumping gold, dumping paper derivatives onto the gold market? What are they afraid of? Why won't they just let it rise?
Because if they stop pushing the price of gold down in the paper markets, the price of gold will rise much the same way that the price of Bitcoin is rising. And what they're afraid is if they don't keep gold contained in a box, the rise would become manic very quickly. And what would be dominating the news cycle, Greg, would be lineups of people outside of coin shops going around the block waiting to buy ounces of gold. And this is a very, very bad picture for the monetary elites who are pushing their fiat money on people, and it doesn't make for good news for them. So this is something they want to avoid at all costs. And this is why they throw billions and billions in fiat money suppressively to keep the price of gold under control. But I mean, even the effect of these dumps of paper contracts on the gold markets, like the COMEX and in London, are not having the same effect that they used to. 5 years ago, a $4 billion dump on COMEX would have probably taken the price of gold down $50. Today, they're lucky if a dump like that causes the price of gold to go down $10 or $15, and it recomposes itself very quickly within a day or two. 5 years ago, a $4 billion dump would have decimated the market, and it would have taken months, many weeks or months, for the market to recompose itself. Well, they've lost the power to basically smear the market the way they used to, and the reason why this is so is that let's just say that in certain areas of the world, Asia and in the East, people and sovereign entities are accumulating physical gold at an insatiable rate. And to really knock the price down today, it requires the unleashing of physical metal into the market, and the West just doesn't have it to sell anymore. So that's what they have, is their paper contracts. That's what they have left, and it's becoming a very tough job to keep it contained.
Would you say that the gold now, and I know you deal in the world of tonnage. I mean, people will say, "Oh, I can buy all the gold coins I want." Yeah, that's nice, but for somebody with $1 billion, 1,000 ounces of gold, it's like a college endowment. I mean, basically, but you deal in the world of tonnage. So, would you say that the strongest of strong hands are now holding most of the world's gold?
Yeah, and increasingly this becomes a bigger truism day by day, Greg. The appetite for physical metal in the East is enormous, and it doesn't go away, and it doesn't wane. But listeners should understand that the gold market itself is very bifurcated, in that the demand for gold in the Western world, specifically in North America or Canada, US, is paltry relative to what it is in Asia. In Asia, it's very difficult to procure tonnage of gold and or silver. But in Canada and the U.S., it's relatively easier to do just that. But you know what? Times are changing, and the reason why times are changing, Greg, is because, like, I know people who are involved in, let's just say, cryptoizing hard assets.
I was going to ask you about your sources. What's the end game with the gold, and what are they going to do with it in the end? I mean, they're not just going to sit on it.
We are going to experience precious metal being cryptoized and basically put on the blockchain. And what the monetary elites are going to find, I believe, in the very near future, is that cryptoized gold and cryptoized silver, which will basically give a surety to the buyer that it's actual, real, backed by real metal. These are going to be superior alternatives to GLD and SLV, in my view, and this will bring transparency, I believe, to the price discovery process for both gold and silver. And so what this means is, ultimately, I believe that GLD, SLV, and COMEX are going to be made irrelevant by the cryptoizing of physical metal.
And will they vault the metal? Just, I don't mean to interrupt you, but will they actually vault the metal in a secure? What are your sources saying on how this is going to work? Are they going to actually vault the metal somewhere and say, okay, we'll let you in to see? Will they pay you if you say, okay, I have a cryptoized gold Bitcoin, it's now worth 10,000, 10,000 an ounce, or 10,000, a unit of cryptoized gold. Can I have an ounce of gold or whatever it is? Will they
I mean, exactly what the denominations will be that it will be redeemable in, I can't say for certain. But to give you an idea, these cryptoized precious metals will have behind them physical ounces stored in vaults in very secure locations. And if people want to surrender their cryptocurrency, they will be able to take delivery of physical metal. I mean, there may be thresholds that need, like, you're not going to be able to. I can't envision being able to redeem $50 worth of crypto silver and being able to get 2 or 3 ounces of silver. There will be a threshold that you'll have to meet. Like, it might be a minimum of 25 ounces or 50 ounces to get redemption in kind. But this is what's coming, and you see the GLD and the SLV, they don't offer redemption. They don't have a redemption quality to them at all. The only people that can, in theory, redeem GLD and SLV for physical metal are the basically the bullion banks, like the Goldman Sachs's, the JP Morgans of the world. And that whole process is not very transparent at all, Greg. And their prospectus for both of those GLD and SLV are very ambiguous, and they're ambiguous for a reason. At least in my mind, they're ambiguous because they're frauds. So there will be no ambiguity with cryptoized hard assets, and that's the beauty of. The beauty of blockchain is that it prevents the beneficial owner of something from selling it more than once.
Well, in other words, at COMEX right now, the fraud of $4 billion dumped in the market, they don't have $4 billion in gold. They don't have $2 billion in gold. They say they have that, and they're selling something they don't have, and thus trying to drop the price. Right? With Bitcoin or a cryptoized currency, you're saying that. Oh, you want to sell $1 million in Bitcoin gold? Okay, we need to see it. You got to bring it here. You got to have it. You have to actually have it. You can't say you have it and sell what you don't have.
Yeah, you will need to, if you're going to sell a crypto asset, a physical crypto asset, you must possess that crypto asset to sell it. You see, and this also is bringing us to a related topic, is the CME, the Chicago, the exchange in Chicago that where futures in everything trade and all the commodities. They're bringing to market a Bitcoin future in the very near, supposedly by the end of the year. And this Bitcoin future is going to be backed by nothing. It's going to settle in cash because they have no Bitcoin they can deliver if people want to take delivery of Bitcoin.
Is that going to work?
I don't believe it's going to work, because the beauty of and the attraction of Bitcoin is that it's decentralized and it's peer-to-peer. And what this proposed new futures contract for Bitcoin is going to do is it's going to centralize it, and it's going to be backed not by Bitcoin, but it's going to be just effectively it's going to just settle against cash. And to me, the idea of taking something that's trading on a decentralized peer-to-peer platform and putting it on an exchange which is centralized, and it's no longer peer-to-peer, to me it's like redesigning the wheel and saying, I've got a new idea for the wheel, I'm going to make it square. Well, square wheels don't roll. And I don't think this new Bitcoin future, as it's been proposed, I don't think it's going to work. To me, it's a dog that will not hunt.
Well, could it backfire? I mean, I don't understand how they're going to have a futures market with none of the commodity they have. It's like saying, we're going to sell stocks, but we don't have any.
I think it could boomerang on them, and it could hasten people's interest in getting to the exits of the fiat world. It could hasten a more rapid demise of fiat money. It could make Bitcoin rise much faster than we've seen. So, and a lot of people say, well, you know, how can that be, and what's fueling all this? And I look at it this way, Greg. In many of the interviews we've done, I've referred to monetary interests having dark money, dark dollars.
I just want to come on, and I want to tell people that is true. You have talked about the dark dollars, and that it's a lot bigger than you thought and than anybody thought. And I know where you're going with the Catherine Austin Fitts and with the college professor that brought up how much money beyond the 20 trillion that we have. And I'll leave it there with you. Go ahead.
Yeah, and the point I want to make here is
21. Just so you know, that's 21 trillion that they've discovered, stolen, taken, misappropriated, above the 20 trillion we already owe. This is according to a college professor, and with Catherine Austin Fitts. But go ahead.
And the college professor, Dr. Mark Skidmore, he's a PhD in economics at Michigan State University, and I mean he has a team of PhD students under him who have done this investigation with him, and I mean they have identified that there's $21 trillion unaccounted for from just two departments in government, Department of Defense and HUD, which Catherine Austin Fitts actually used to be the undersecretary of HUD back in the Bush 1 administration. And so they've identified that there's 21 trillion that's unaccounted for. I've been saying for years to anybody who wants to listen that the Exchange Stabilization Fund is a mega slush fund, which I have speculated probably has in the tens of trillions in it. This is dark money, because it's money that's not even acknowledged to exist. And you know, the institutions like the Federal Reserve, Greg, they publish monetary aggregate data on a weekly and monthly basis. It's the St. Louis Fed that keeps track of the monetary aggregates, and you know, they tell us that the money supply is, say, X. Well, you know, my view about the reliability of that data reporting, I think it's all bogus, because they're not measuring or counting how many dollars would be contained in an entity like the Exchange Stabilization Fund, where it's dark money. And so what happens is, instead of money supply being X, maybe the real money supply is 4 or 5 or 10 times X. And
stop for you're saying that they don't have to print the money to have hyperinflation. The money that needed for hyperinflation is already in existence. Is that what you're saying?
Yeah, it is in existence, Greg. It's hiding in dark pools where the monetary elites have it at their disposal anytime they want to, for instance, do an intervention in the gold market and dump paper dollars, or digital dollars into the COMEX to knock the price of gold down. They have it at their fingertips whenever they want to use it. When the U.S. government auctions bonds and foreign interest isn't big enough to soak up all the bonds, they have this dark slush fund where they can pull money out of, and then they can put it in an account that they set up in the Bahamas or in the Cayman Islands, or in a slush account that they have maybe at the Bank of Ireland, and they can effectively just prop up and buy bonds whenever they want. I find it truly amazing, Greg, that the United States of America has never had a failed bond auction. And that would make the United States of America the only country in the world that's never had a failed bond auction. Like Germany, through the years, Germany's had failed bond auctions. France has had failed bond auctions. Canada's had failed bond auctions.
In other words, they put the bonds out there. They didn't get enough buyers at a certain interest rate to do it. They'd have to jack the interest rates up in order to make that bond auction be good. They put the bond out there at a certain interest rate, and nobody bought it.
Greg, it goes further than that.
Okay.
It actually goes further than that. Because what it's really about, there have been times in history where the international markets have just had no appetite for debt of a certain duration in time. Like maybe on a given day in history, the global market had no interest to buy X number of billions of 10-year government bonds of any nation. But you see, that doesn't happen in America. It sticks out. It sticks out as such a sore thumb to me. It reeks of somebody, for instance, going out and playing golf and reporting that they had 3 or 4 holes in one in a round. Statistically, these things don't happen. Statistically, a country that auctions as many bonds as America auctions, statistically, they should have had a failed bond auction. They should have had a number of them over the years, but they've had none. Nobody in Major League Baseball, Greg, bats 900. I think the record is somewhere around 400. And if somebody's telling you they batted 900, you know that they're not giving you straight goods, because nobody bats 900 or 1,000. It doesn't happen. And the notion that a country that issues as much debt as America and they've never had a failed bond auction that's a dog that doesn't hunt. It's just not true. It's not. So we know that there's been nefarious intervention, and then you have to ask yourself, well, where did the money come from? Well, it comes from these dark pools. These are dark dollars that are in existence. So if you accept that these dark dollars exist, Greg, I now pose this question: what happens if the people in control of those dark dollars, the trillions of dark dollars that are in existence, what happens if they become concerned that those dollars might soon turn to confetti and be worthless? What do you think they're going to do with those dollars then?
They're going to buy. They're going to buy stuff like Bitcoin that's now $8,000 a unit.
Yeah,
and let's get back to that. So if it's revealed that they have all this money, that they printed all this money and it's worth a whole lot. The dollar doesn't have to go to zero. The dollar can go to 50 cents on the dollar, and their 21 trillion that they've stolen is 10.5 trillion. I mean, they could take that. You'd lose 10.5 trillion dollars, with a currency revaluation. You'd lose. The rich don't want that. And you're saying that they would go and buy. Well,
they'd buy everything. They'd buy everything and anything, Greg. Anything they perceive to be rising in value or tangible. Anything that will be accepted in exchange for, like in commerce around the world. And right now, it sure looks like Bitcoin would be one of the go-to things. But I would say expressly, the real objects of that money would be the physical metals, gold and silver. And this, in my view, is what could absolutely topple this whole debacle that goes on in paper markets on COMEX and London. And I think we could, and I've long predicted, I do believe I will live to see a day, Greg, when you cannot buy an ounce of gold with fiat money. I believe that will happen.
You're saying that right now, you going out to be able to buy an ounce of gold for $12.80 or $13.00 or whatever it is with the commission, and an ounce of silver for $17 plus the commission. You're saying that's a gift. That is a super big gift from heaven. That
I think they are the most.
That's like buying Bitcoin at 50 cents a unit.
Yeah. Well, yeah, 2 cents a unit maybe. And to me, gold and silver are the most undervalued and mispriced assets on the planet. Silver even more so than gold.
I've heard that a lot from people, that they're mispriced, but they're mispriced because they're being suppressed. I mean, massively suppressed.
Serially suppressed, Greg. Yes.
And they are. So what? They're afraid that if they take that thumb off the scale, it's Jack and the Beanstalk. It goes right to the stratosphere. Is that what you're telling me?
That's what I believe is coming our way. It's not a question of whether it happens. It's only a question of when it happens. And ownership of physical precious metal, in my view, is a lot like owning fire insurance for your house. Except I would suggest to you that ownership of physical precious metal is truly like having fire insurance when you've been given a guarantee that your home will burn. Because it's going to burn. And when it does, the question is, do you want to have insurance or not? And if my house doesn't burn down this year, that doesn't mean that I get rid of my insurance next year.
I had somebody write me and say, tell me about the exit strategy for gold and silver. And I just wrote them back and said, it's a core asset. This isn't a trade. Just whatever you think you need as a core, hold it. I don't sell gold and silver. I sell nothing. So you should just hold it. You're thinking about it. Some wackadoodle. I'm going to trade something. I'm going to get out at the top.
Exactly.
This is goofy.
But I mean,
you're not grasping how bad things are. I mean, things are bad.
But our monetary system is threadbare at this point, Greg. And viewing, look, when people talk about exit strategies, you should answer that question with another question. What's your exit strategy with your fire insurance when you've been given a guarantee that your house will burn? It's just something you can't be without, because when your house burns, you want to be insured so that you can continue to exist and have some semblance of normalcy given to you when unthinkably horrible things happen. And our current financial system globally is truly a mess. It was just earlier this week, or maybe it was last week, when the European Central Bank met, and they were actually discussing whether they're going to do away with deposit insurance on people who have euros in European banks. And there's a reason why they're discussing doing away with deposit insurance because they know the whole financial system is extremely weak. And these, they're thinking, the elites are thinking about preservation of themselves and their beloved institutions, and they're planning for a day. In essence, they're planning for a day when these things that I'm speaking of are going to happen. And then you have to ask yourself, why are they? If these things aren't going to happen, why are they planning for them? And they are. They're doing it right under our nose.
And this is going to fold over for, this is USA Watchdog. So, the question is USA banks. They tell you, Jamie Dimon just said, we have a fortress, a balance sheet, and our bank is great. Of course, I think he just got tagged with some money laundering, I believe, at J.P. Morgan. But anyway, I digress. But this is going to roll over here, right? I mean, the banks here aren't as strong as they would like you to think, right? I mean, right now we do have the FDIC. That's basically a federal government insurance policy, but the banks are going to come under pressure. Is that what you're saying?
I do believe so, Greg, because banks have made crazy, unthinkably large bets in derivative form, and when they lose the ability to control these markets through the use of derivatives, and if we see the price of gold or silver rise to unthinkable levels, this directly impacts many of the major financial institutions, because they are the ones that have got the big shorts. They're the people that have sold the paper contracts that have kept the price suppressed, and that's another reason why they have to continue suppressing the price, because the huge financial institutions like the Goldmans, the J.P. Morgans, the Citibanks, and the Morgan Stanleys, these are the people that make up the short open interest. These are the people that have sold the paper contracts, and if the price gets away from them on the upside and goes manic like Bitcoin is going right now, they will not be able to liquidate other assets quick enough to cover themselves, and this presents a huge problem. And
you're telling me that they would freeze up? They would be caught holding the bag of crap that they've pumped out. Is that what you're telling me?
Yeah, and not only that is, if the big banks become, let's just say, if we get a credit freeze because people don't trust the big banks' ability to pay, which is what happened in 2008. We had a credit freeze where the paper markets froze up, where commercial paper stopped trading. Banks would not, in 2008, commercial paper markets or asset-backed commercial paper, those markets were frozen. And why they froze, Greg, was because everyone is probably familiar with the term subprime loans, right, and subprime mortgages. What happened in 2008 is banks working hand in glove with credit rating agencies. They took very poor credits and they bundled them into, like, when mortgages are originated, mortgages are put into what are called pools, and these pools where they bundle up mortgages are then assigned a credit rating as an entity consisting of many mortgages. But they took mortgages that were of poor credit quality, people that maybe took out mortgages where they didn't have jobs, or they had misreported their income, and so they bundled all these poor quality mortgages into pools, and they called them subprime mortgage-backed securities. And then working with credit rating agencies, they rated them as AAA, and they were never AAA to begin with, but they felt by bundling these things that they could gain, or they bribe people to rate these things as AAA. And AAA credit rating is supposed to be, in credit markets, AAA is sacrosanct. Up until 2008, no AAA rated security had ever failed. Never. It had never. I mean, AAA, you know, in a horrible situation prior to 2008, AAA might be downgraded to a single A or a double A, or even to something in the B range. But no AAA security had ever failed because AAA was sacrosanct. It couldn't fail. So what happened in 2008 when AAA rated subprime mortgages failed, people didn't know what AAA meant anymore, because AAA was supposed to be something that couldn't fail. And when AAA fails, credit markets freeze. And that's when you can't sell any commercial paper in the market. And you see, our existence in the Western world is dependent upon corporate paper being able to be sold, because it bridges the time from when goods are produced to when they're sold to an end retail person. They need to be, like, inventory needs to be financed. Goods in transit need to be financed because you haven't got your end sale yet. And the financing of everything that we consume in the world, it's all financed through commercial paper. But when AAA fails, nobody wants to buy any paper, because they say, and the person holding the paper, they say, well, why won't you buy my paper? It's AAA. Well, what do you mean AAA? AAA just failed. I don't want to buy some more paper that's going to fail.
And you're saying that's coming again.
Yeah, it's coming again, Greg. For sure it's coming again. And when the credit markets freeze, and the reaction of the monetary elites when the credit markets failed in 2008, they used electroshock therapy in the interest rate markets by intervening in the derivative markets, making the banks captive buyers of U.S. government debt, and they forced interest rates down to zero. And they figured, and it did work. By forcing rates down to zero, they finally got people willing to buy commercial paper at, you know, rates much higher than zero, because a lot of banks, when they buy paper, they'll buy commercial paper and they'll short something against it. And what they did is they created such crazy spreads between the yield on government paper and the yield on corporate paper, that people finally started to, they loosened up the credit markets enough where commercial paper could start trading again. But I can tell you, back in 2008, Greg, banks were not even lending to one another in the interbank market on an overnight basis, because that's how paranoid everyone was. Because no, banks didn't want to lend money to one another because they were concerned that, you know, they could be lending to the next Bear Stearns or the next Lehman Brothers.
So you're saying that we could end up with another credit freeze, and the shelves on the stores would go empty, and this wouldn't get fixed near as fast? Is that what you're saying? Explain.
Well, they don't really have the interest rate tool in quite the same way they did in 2008. Because remember, Greg, in 2008, you know, you had a 10-year bond yield up, I think, close to 4%. And we had T-bill rates up at 3 or 3.5%, and, you know, they were able to plunge them, you know, basically down to zero. But I mean, you know, where are we today? We got a 10-year bond at in the U.S. at 2.30, and we've got you know, a Fed funds rate up around 1%. I mean, they just don't have the mustard to do it. And you know what? The other thing too, people are learning. People around the world are learning that this is a Ponzi scheme. And that's what it is. It's a Ponzi scheme, and people's awareness of the Ponzi scheme is growing.
Danielle DiMartino Booth, she was an advisor to Richard Fisher at the Dallas Fed, and she said that she actually said that people are panicking into Bitcoin. At some point, are people going to panic into gold, physical gold and silver?
Absolutely. You know, in all honesty, Greg, let's just say the movement into physical gold and silver has been going on for years, but it has not expressed itself in the mainstream press or to the average Joe walking on the street, because all they see is the COMEX price, Greg, and the COMEX price has been kept contained by using brute fiat money force. And there will come a day when people won't be willing to take the fiat money in exchange for the physical metal. And the day that happens, that's when the dam breaks, or that's when that's when the barn doors are left open and everything inside just runs out.
The bankers are going to end up turning on this trade. They're going to go from suppressing it to buying everything that they can to vent off all their dark dollars, right?
Yeah, because
the bankers are causing it to be suppressed, and the bankers will likely cause it to skyrocket.
Well, when the banks know that it's a foregone conclusion that it has to go up, the banks will, in my view anyway, because it's in their DNA, they will try to front run it. Because banks try to front run everything. That's been my experience in my life. Banks try to front run everything. They front run their customers, and they will be first in line.
And one last question: timing. Your sources. I know you have confidential sources. There's a limit amount of information you can give because they give you proprietary information. But you have this CME exchange for Bitcoin supposedly at the end of the year, the beginning of the year coming on soon. Are the people that your sources? Are they running to get this commoditized or the gold and silver Bitcoin blockchain on at the same time or before or just after that the CME is doing? Is that the timing there? Is it at the beginning of 2018? Are we going to have this stupid CME exchange where they don't have any Bitcoin, and then you're going to have Bitcoin basically blockchaining gold and silver and vaulting the actual metal? Is that going to be soon?
Yeah, these are things that are in motion now. Just Greg, as it is the creation of this CME Bitcoin future is a work in progress. If we're to believe the words of the guy who heads the CME, and I can't remember his name at the moment, but the inevitability of there being cryptoized physical precious metal is as sure to happen, and they are not working to the CME's timetable at all. But these are things that have been underway now for quite a number of months, and I would expect that we'll start to see them popping up in early 2018.
You're going to see an actual announcement of we have blockchain, gold and silver. Here are our vaults in wherever they are, Singapore or London or Switzerland or wherever they are. Here we have, we've securitized this. You can buy it, and you can get redeemed gold and silver if you'd like.
Yes.
You're saying that's going to come out.
That's coming.
In early 18.
Yes.
The price is going to skyrocket. I mean,
it may not skyrocket immediately, but it's going to me. It's going to spell, and it's going to mean the undoing of. I think it's going to be extremely disruptive to GLD, SLV, and COMEX and LBMA.
Yeah. They won't.
It'll be extremely disruptive.
They're going to take away the price setting mechanism away from them. And they're going to move.
I believe it will prove to be a more transparent price discovery process, and I think people will gravitate to it, Greg.
The simplest play you can do right now is go down to your local coin dealer and go buy yourself, a monster box of silver or 10 ounces of gold or whatever. I mean, is that the simplest play on the planet?
My belief is, and has been for a very, very long time, Greg, there's no such thing as a bad day to buy physical precious metal.
And now more than ever, you think the price is, as you said, the most suppressed price on the planet?
I believe it is the most suppressed commodity, silver, and after that gold, the most suppressed prices of hard assets anywhere on the planet. And in my view, when I speak of this, Greg, I'm never suggesting that anyone take next week's grocery money and go buy physical metal. My view to precious metal is, it's a great place to store your money, to store your purchasing power for use at a future date. But I am not an advocate of borrowing money to buy precious metal, because I'm not an advocate of having debt. But with investable funds, I think there should always be a place to add to your physical precious metal store, and it should be done religiously over time. So that's my view on that. And I mean, over time, physical precious metal, even though it's been suppressed terribly, I mean, the prices are still much higher than they were 15 years ago.
Oh yeah,
I mean,
yeah. You could buy an ounce of gold. It's amazing. You could buy an ounce of gold in 2000 for around $300 an ounce.
Yep.
It's 12 something. And so, anyway, listen, Rob Kirby, CirbyAnalytics.com is the site. You have a sign-up fee. I think it's $145 a year. You converse with your clients via email. You have deep global contacts. You are also in the business of securing tonnage. So you talk to people with lots of money. That's always a good contact to have, because they know they're on the cutting edge of what's going on. Rob Kirby, CirbyAnalytics.com. Thank you for joining us today on USAWatchdog.com.
Pleasure being with you, Greg.